Welcome back to a bonus hour of Fast Money. Still a few questions left to answer, especially on news of the day.
Hi, Fast Money team. I have a question pertaining to Amazon. Amazon is 10% or so off its high. It's been trading in a sideways pattern. Despite the fact that analysts on the street have said that Amazon is going to outperform the market, it seems like it's kind of stuck right now. I think the highest analyst on the street has a price target of 4,300. And I'm just wondering, do you think this is a good entry point for Amazon, or do you think I should wait for a better entry point to start a new position in Amazon? Your thoughts was greatly appreciated. Thanks, guys.
Before we answer Phil in New Jersey, let's get the latest on Amazon's unionization with Kate Rooney. Kate.
Hi, Melissa. Thousands of Amazon workers at a warehouse in Alabama are now one step closer to holding a vote on whether or not to unionize. After 3 days of hearings before the National Labor Relations Board, the tech giant and a retail union looking to represent some of Amazon's workers agreed on the size of the potential bargaining group, as well as what type of workers would be allowed to participate. The vote could include more than 5,000 full-time and seasonal employees. This really sets the stage for one of the only times Amazon's workers have had an opportunity to vote on unionizing. The last chance came 6 years ago for workers at a Delaware warehouse, which didn't end up passing. Amazon has gone on a hiring spree during the pandemic, adding about 1,400 employees per day. The safety and pay of those Amazon workers at fulfillment centers and grocery stores are now front and center during U.S. shutdowns. It's up to the Labor Relations Board to determine how and when the vote will be held next year. It's expected in mid-January, but Amazon and the union still disagree on whether the vote should happen by mail or at the facility. Melissa.
Kate, thank you. Kate Rooney on the latest on Amazon's unionization threat. And I say threat, Guy, because obviously this could mean increased costs for labor for Amazon in terms of benefits, in terms of wages, etc. So what do you tell Phil in New Jersey about Amazon?
And obviously the concern there, margins would contract, and that's obviously one of the big inputs there in terms of the stock has been margins. What I tell Phil is, go back to September 1st, and I know he knows this, but the stock went from $35.50 to $29.50, basically in a straight line over a 2-week period. We're in the middle of that now. In terms of position, it always looks terrifying. I'd layer in. I mean, I never really say this, but in terms of Amazon, I think you can. You buy a portion here, and you look for potentially that move back to $29.50 to buy the remainder of your position. That's the way I would play it into 2021.
Yeah. Tim, what's your take on this story?
I'm less worried about the dynamics of the story and the cost impact to Amazon. I care a lot more about the e-commerce trends that are very much in their favor. I actually like the fact that the stock's been consolidating and underperforming a bit. I think the AWS slower growth is a problem, possibly for the multiple, but I love the e-commerce trends. Amazon only dominates more next year.
Yeah, so let's say margins get thinner. You got volumes up, right, Dan? And maybe volumes are up in a secular way, meaning they will stick higher because people have changed the way they shop.
Yeah, the retail margins have always been about as thin as it could get for this story. But listen, I agree with Tim on the consolidation here. This thing had such a huge ramp off the March lows. The fact that it continued to run into the end of the summer and is now consolidated, I think that's kind of bullish. When you see money come out of this rotation trade, some of the industrials and energy and financials, that sort of thing, once that they kind of mean revert a little bit, you'll probably see Amazon make a move back towards those highs. So to answer his question, it depends on time horizon. As a trade, play for those levels of 3,500, sometime in the new year. But this is one that I think people want to put away for their kids.
All right, let's get to one on the pharmacy and retail space.
Is CVS Stock a steal at the current price levels?
All right, CVS. Guy, what do you say?
That was a succinct question.
Very.
I mean, that's fantastic. I don't think it's a steal. I mean, people say valuation, it's cheap, but you have no EPS growth. I mean, you probably have flat EPS year over year, so it's not a steal in that sense. In terms of the stock, I think 77-ish has been a double top. I think you're looking for a breakout above there, but I don't think it's a steal at all. I think you got to wait and see into earnings, I believe, early February. By the way, one of the concerns here in CVS is it's going to get Amazoned, going back to our prior question.
Tim?
Yeah, I think that the valuation is a function of where the pharma business may be changing. Amazon's entrance into the pharma biz. Just there were concerns around elections and the pharma benefits dynamics with the company. But as a retail play, I actually think they benefit in the next 6 to 12 months of fiscal support and really where people are doing their shopping. So I like the stock longer term.
They are an essential service, and they are instrumental in vaccine distribution at this point in time. So shorter term, Dan, what do you think of CVS?
Yeah, I mean, again, it went from 55 in early November up to 75. So it's come back here to the high 60s. I don't think it's a steal by any means, but if there's something that you like about this story, then you buy it on weakness, thinking that 55 to the downside is probably your worst case scenario in the near term.
All right, can you believe it? This is going to be the last question of this particular bonus hour of Fast Money, perhaps reflective of the volatile year we've had.
Hey, Fast Money. A couple of investors I've been following, Chris Sacca and Roger McNamee, have hinted it's a good time to take some money off the table. What do you think?
One, I love that Bill in Idaho is filming himself in front of a Deere tractor. I think that it's gold. Guy Adami, what do you say?
I did some great fly fishing in Idaho. Wonderful state, by the way. And yes, I've been. I think Chris Sacca and Mr. McNamee, they're geniuses. And if they're getting cautious here, it's not a bad idea to be cautious. And I also love the fact that Shepard Smith might be sitting at his desk right now watching the end of this show, wishing that he was hanging out with us. That's just my sense.
I believe that he wishes that he were hanging out with us, but he is off today. And the lovely and talented Contessa Brewer is going to be in, which is just as exciting, at least for me. Dan Nathan, what do you say?
Yeah, I think a really important point here is Chris Sacca and Roger are both VC investors. They invest early in companies at a very early stage of their growth. So for them, the time horizon is very, very different. I think what they're really speaking to is about valuations. Some of these companies that have exited and gone into the public markets, and they're probably trading at valuations they never thought were possible. So I'm kind of in their camp, obviously. And I'll throw in Bill Gurley, who was on the closing bell yesterday of Benchmark, who also made some commentary about valuations and such. He didn't go so far as to say take money off the table, but he did say that a few years ago he thought things were getting a bit frothy. So that's a great interview. Go listen to that one too. So throw another genius investor onto the pile.
It was my mistake. Shep Smith is in fact in. So my sincerest apologies to Shepard. Contessa's in tomorrow. Tim Seymour, what do you say? You agree with Sacca and McNamee?
So, Mel, while I sat there quietly looking like I was still getting audio, I actually didn't hear any of it. So I am back.
Time to take money off the table.
Would you mind paraphrasing for me?
Time to take money off the table going to the new year.
Well done. Very succinct, by the way. Look, I think you have a case where there are certain parts of the market that have had very big runs. We've talked about tech, but more importantly, we've talked about high-flying momentum stocks around software and some of the big data plays. And I think those are the places I would be most concerned about. The industrial rotation is something that I think you actually should be adding into strength.
Shepard Smith here. Thanks for watching CNBC on YouTube.